Welcome back to the channel. Today, we're diving into Emkay Global Financial Services' latest research report on Tata Motors, which has been upgraded to a buy with a price target of 1,175 Indian rupees per share. Let's break down the key highlights and what this means for investors. Tata Motors has seen a 16% correction from its peak, driven by two main factors. First, a downgrade in BMW's outlook due to supply issues and weak demand in China, and second, slowness in the domestic commercial and passenger vehicle markets. But Emkay believes this is where the opportunity lies, and they've upgraded Tata Motors to a buy, with the target price remaining at 1,175 Indian rupees per share. Now, let's talk about JLR, or Jaguar Land Rover, Tata Motors' global luxury brand. While BMW's downgrade pointed to weakness in China, JLR is less exposed to that market. Only 24% of its business comes from China, compared to 32% for BMW. This reduces the impact of China's weak demand on JLR's overall performance. JLR's profitability outlook remains strong, especially with its push into electrification. The electric Range Rover is already making waves with a 38,000-unit waitlist, and Jaguar is going all-electric in the near future. The best part? JLR is on track to become net debt-free by FY25E, which is a major milestone. Switching gears to Tata's domestic business, the commercial vehicle segment, especially medium and heavy commercial vehicles, or MHCVs, has been slow recently, but there's light at the end of the tunnel. The second half of FY24 is expected to benefit from increased government infrastructure spending. This could kickstart a recovery in demand for the next year. From FY26 onwards, the MHCV market is projected to enter an upcycle, driven by the delayed implementation of the rail-dedicated freight corridor. Margins here are expected to expand by 280 basis points over FY24 to FY27, supported by disciplined pricing and strong fleet operator profitability. On the passenger vehicle front, the industry is seeing some challenges, with rising inventories and higher discounts. However, Tata Motors is relatively better positioned than its peers. New launches like the Curve, which already makes up about 10% of dealer volumes in some markets, are expected to help Tata outperform. In addition, Tata Motors recently launched the CNG variant of the Tata Nexon. This strategic move is expected to further drive demand in the price-conscious Indian market. With the growing preference for alternative fuel options, this could boost sales and positively impact Tata Motors' share price in the near term. Emkay estimates a 6% volume CAGR for Tata Motors passenger vehicles over FY24 to FY27, despite the sluggish industry outlook. Let's take a quick look at the financials. Revenue is expected to grow moderately at a 5% CAGR over FY26E and FY27E. EBITDA margins are set to expand to 14.6%, driven by better cost controls and a favorable product mix. Adjusted EPS is projected to grow by 21.8% in FY26E, though we'll see some moderation after the stellar FY24 performance. Return on equity, ROE, is forecasted to stabilize at 20.9%, while return on invested capital, ROIC, is expected to reach 32.7% by FY27E. What about the stock's valuation? Emkay points out that Tata Motors' valuations remain undemanding compared to its peers. The stock is trading at a P/E of 11.6x for FY27E, making it an attractive option for investors at current levels. However, risks do exist. If China's economy weakens further, JLR could feel the impact. Delays in infrastructure projects like the rail DFC could also hamper the expected recovery in the MHCV segment. And in passenger vehicles, rising competition and inventory pressure could affect margins. To wrap it up, despite short-term challenges, Tata Motors is well positioned for long-term growth. With JLR's electrification strategy, improving CV margins, strong performance in passenger vehicles, and the potential boost from the Nexon CNG launch, Emkay believes Tata Motors offers a compelling investment case with a target price of 1,175 Indian rupees per share. That's it for today's breakdown. If you found this analysis helpful, hit that *like button and subscribe for more insightful content on the stock market. Let me know your thoughts on Tata Motors in the comments below. Thanks for